Welcome back, YouTube. So, today's topic is going to be something different than what the other two videos that I have uploaded are about my 2012 Mazda 3. But I'm going to go on the route of talking about finance and savings and investing, sort of. Currently, right now, as you might know, obviously, the general market is up quite substantially this year. S&P 500 is up around close to the 24% total profits year to date so far this year. It's doing very good. Um, I do have investments of my own, and they are doing pretty well. Um, if you are looking to invest, whether you're young, I'd say it's the best time to invest when you're young. I know at the time you might not be making as much money, but whatever little bit you can put away, make sure to put away. Um, I would say what's best would be to at least start with the bank, start getting a handle on your finances and see what you're spending, what you're saving. And as far as investing, I have stocks that I invest in. And it's best to, in my opinion, my strategy is to invest for the long term. So buy, hold, and preferably, I own a lot of dividend paying stocks. So the company pays out a dividend either monthly or quarterly, which is every 3 months out of the year. And then it's best to reinvest those dividends to take advantage of what's called compound interest. That's going to be the best scenario for the potential growth of your portfolio. And as far as investing in individual stocks, it's probably best to stick with around 8 to 10 stocks in your portfolio just to start out. Don't go too crazy and get, 15, 20, 30 different stocks. Pick companies that you are knowledgeable about and are aware of what their current market price is, and not just jumping in and saying, oh, this looks like it's a good deal, when you didn't look at the past history. It might have been, on an uptrend for the last 3 or 4 years. May seem like a low price point at this time right now, but you don't want to be chasing the market. You don't want to be buying stocks on an upswing. You want to be comfortable with your position as you enter into a stock price, because you don't want to have to buy the stock and then feel bad about, oh man, it's going to take me, a year or 2 years to get any profit out of this. But just be aware of what you're buying. Buy what you know, buy what you like. But just start small. Invest small, start small. And that way you can learn from your mistakes and grow from that point and move forward. It's very hard. There's a lot of risk involved in investing, but as I said from the beginning, if you're young, that's the best thing for you, is to get as much time under your belt as possible to make your money grow for you, and also to weigh out the good and the bad times that you're being dealt with in the market volatility going up and down. And also keep in mind that when you're investing, you need to have diversification of your portfolio as well. So not just one particular sector, like let's say for instance tech sector or the health sector. You really don't want to do that. You want to make sure you have a good diversification. And everybody tries to either meet or match or beat the S&P 500 in their stock portfolio. But, unless you're a super expert, which I'm not by any means affiliated with anyone, or I am not a financial expert at all, but I have had a little bit of time in the market, and honestly, I'd have to say it's done me pretty good so far. And, I'm proud of the goals that I've set for myself. I've set small goals. That way that you can say, okay, you've made it this far, and start going and advancing from that point moving forward. Don't anticipate to make a ton of money. I mean, whether you're starting out with your 401k, with your employer, or stocks, or anything of that sort, it's going to take you 10 plus years to really start getting a handle on your investments and having that timeline of elapsed time to view the outlook and span of how the portfolio has performed, and what adjustments that you may or may not need to make within your portfolio. And there's the advantage with dividend paying stocks is not only is it nice to have that dividend, but if the company is doing well and profitable, more than likely they will also increase their dividend payment as well. And then that way you have basically interest on that dividend because the dividend increased. And like I said, diversification is key to your well-balanced portfolio. I mean, on average, your general retirement account, people try to get anywhere between 6 to 8% gains is a really good average, but like I said, some years you might have 10, 12, maybe even upwards of 14 to 15% gains in your retirement account. But some years, the average stock, market volatility and gains for the year, usually the S&P average is around 9 to 10% a year. So you want to try and be at least somewhat near that amount with your retirement account, but it's not always going to be that way. But it's best to start early, start investing while you're young, do your research, take your time, go to the library, take out books, read, get your resources, get your research, ask other people about what they've done in the past, and be mindful of the risk that you're taking as well. And also, the biggest key to investing is even whether you're just starting out or you're already invested, X amount of dollars. Invest what you can afford to lose. I know that that's hard to grasp when you're first coming into the market or first coming into investing, but you're going to want to have to be okay to take risk, and maybe at times a lot of risk at the beginning. But over time, things will compound. What goes down will eventually go back up, but things have their peaks as well. So as of right now in the market, we are near, or if not succeeding, our previous market highs that we had last year. And so, we have the elections and a lot of things going on in the market world right now. But, the way I see it, basically any time in the market is a good time to invest. You just got to know where you want to invest and what areas are people really not necessarily focusing on, but that have huge potential for the future. So always be looking into that mindset of what is this company doing now to maintain its growth for the future, or are they having some really, really bad problems going on right now that it's going to affect their stock price into the future? Because you really don't want a stock price to plummet. You might say, oh, well, that's a perfect time to buy, but there might be a buyout situation, or the company might just go completely bankrupt, and all of your investments that you had are either declining or completely get wiped out. So just be aware of that and be mindful of what you're getting yourself into. And I hope that this video helped a little bit of piqued some interest into some investing ideas. There are many platforms out there. For instance, right now, there's Acorn, Robinhood, M1 Finance. Those are some really easy learner, easy beginner type investing platforms that you can use. But you could go to any broker, and pay a lot of other, some substantial fees at times. But like Robinhood, Acorn, M1 Finance, those are like, zero commission trades. And it's easy platform to understand, easy to invest, easy to start. And you don't have to have a large balance, large minimum to start. So good luck investing. I hope that this video did bring some bit of help to you guys, whoever's watching this. If you did like the information that I'm bringing to you, please click like, subscribe to the channel. I do post about my Mazda car, talking about high mileage cars, because I do have one. You could take a look at those videos. This is currently my initial finance video, so I hope it brought some interest to you guys, and I hope that you do like, subscribe, and continue watching. Thank you.